Before we get started, I'd like to recognize myself. If you'll rise, we'll say the prayer and the pledge. Committee at any time. I now recognize myself for my opening statement, and I want to welcome today's hearing, all of you again for being here, where we will be focusing on the current economic realities impacting Main Street America. These types of hearings are especially important to our committee because we get the chance to hear directly from our small businesses back home. First, I want to thank our witnesses for being here today. I know all of you have traveled a long way, some as far as Texas, to share your stories with us, and everyone here greatly appreciates it. This committee serves as the voice for Main Street America and Washington. Each and every day we strive to learn more about the current state of small business from the people who know it best, our nation's job creators. There's no doubt that in the first half of 2024, they've experienced many ups and downs. I hold the opinion that starting a small business is the definition of the American dream. Part of what makes America so special is that it's a place where anyone from any background can take a risk, bet on themselves, and bring a new service or product to the marketplace. Our economy is dependent upon small businesses, and it is our job here in Washington to ensure that they have a fighting chance. Unfortunately, many small businesses are dealing with a variety of challenges, many of which are a result of bad policy decisions. Main Street America has been getting bombarded with regulations that are causing small business firms to play defense. Just look at the numbers. Since President Biden took office, his administration has instituted new rules that are estimated to cost over $1.6 trillion. Every dollar spent on additional compliance staff could have been used to bolster their core operations, and every hour dedicated to reading and understanding the new regulations could have been used to discover new growth opportunities. And worst of all, when a business owner fears expensive new mandates could be on the horizon, they hold up hiring that extra employee or buying that new piece of equipment. America's entrepreneurs have had to confront historic challenges: the COVID-19 pandemic, out-of-control inflation, broken supply chains, high interest rates, and labor shortages making it hard to find quality employees. But as small businesses have done countless times before, they have endured. But those of us here in Washington must fight back against these policies which have been strangling America's job creators. As we listen to the state of small business in America, we salute the entrepreneurs who continue to fight and give selflessly back to their communities. This committee is here to help them and make life a little bit easier, and we mean that. We really do. And I'm excited to have all of you here with us today, and I'm very much looking forward to today's hearing. With that, I will yield for opening remarks. Congressman Chu, please.
Thank you, Mr. Chair, for this important opportunity to discuss the realities of our economy and hear from those who do incredible work directly in the communities we represent. Hearings like this allow us to take stock of how our efforts in Congress affect those on Main Street. 4 years ago, small businesses had to navigate an unprecedented array of challenges stemming from the COVID-19 pandemic, from public health shutdowns to supply chain disruptions, labor shortages, and rising costs. Yet, despite these obstacles, small businesses have demonstrated extraordinary resilience. Obstacles remain, but our strong economic headline numbers clearly show slowing inflation, low unemployment, and sustained growth. Looking around, there is much to be proud of. We've seen a remarkable surge in small business creation since 2020, reversing decades of decline. It's become clear this isn't just an anomaly due to the pandemic. It is a trend that is continuing even today, 4 years later. This durable small business boom shows that so many Americans still have hope for the future and trust that we are moving in the right direction. The ripples of the current startup boom will reverberate for decades, delivering wealth creation for families, opportunities for workers, and economic development for communities across the country. This is especially significant because many who have historically been underrepresented in the business community, including women and minority business owners, are the ones who disproportionately power this small business boom and reap the broad benefits delivered when we build the economy from the bottom up and the middle out. The resilience in our economy continues to overcome headwinds primarily because of investments made by the Democratic Congress and the Biden-Harris administration over the past several years. This transformational fiscal policy started with the American Rescue Plan, which played a critical role in stabilizing our economy during the pandemic. By extending support to small businesses and providing direct stimulus to American families, we kept millions of businesses afloat, all while providing relief to the unemployed and cutting child poverty in half through the expanded child tax credit. This was complemented by historic bipartisan legislation when we passed the Infrastructure Investment and Jobs Act and the CHIPS and Science Act, two landmark laws that are providing long-term investments to strengthen our supply chains, rebuild our country's road and bridges, and lay the foundation for a more resilient and inclusive economy. These investments are supporting the growth and the flourishing of small firms and new startups. Finally, Democrats and the Biden-Harris administration passed the Inflation Reduction Act, which included the largest ever investment in fighting climate change and provisions to further incentivize domestic manufacturing and lower costs for everything from healthcare to electricity. While there is no doubt these laws will provide a boost for small firms into the foreseeable future, there is still much more to be done. Access to capital remains a challenge, and the high cost of borrowing poses a long-term threat to small businesses. In this high interest rate environment, SBA's capital access programs are especially important for connecting small businesses to affordable financing. Additionally, the government can continue to do more to incentivize innovation, from reversing disastrous provisions of the Tax Cuts and Jobs Act to extending our core SBA programs, including SBIR and STTR. Finally, investments in families will continue to strengthen small businesses. Whether it's the expanded child tax credit or continued investment in childcare, these actions can help build a more sustainable and resilient business environment while delivering for American families. It's crucial that we continue to support these businesses through thoughtful legislation. While the accomplishments of Democrats in Congress and the Biden-Harris administration have provided a strong foundation, we must continue to build on this progress, ensuring that small businesses can thrive in a stable and supportive economic environment. Thank you, and I look forward to our discussion today, and I yield back.
Lady yields back, and I will now introduce our witnesses. Our first witness here with us today is Ms. Hazel Davis. Ms. Davis is the Vice President, Compliance Manager, and Corporate Responsibility Officer for Jefferson Bank, located in San Antonio, Texas. Ms. Davis joined Jefferson Bank in 2013 as Vice President of Fair Lending and CRA Officer before transitioning to her current position because of her regulatory compliance expertise. Prior to joining Jefferson Bank, she was Compliance Officer at Frost Bank and Hilltop Bank. Ms. Davis currently serves as board member of the Texas Bankers Association and recently served as the president of Financial Women in Texas. Ms. Davis attended Chadron? Say it again. Chadron State College, where she earned her Bachelor of Arts degree in Business Administration and Accounting, then attended the Graduate School of Banking at the University of Wisconsin in Madison. I want to thank you for being with us today, and I'm looking forward to today's important conversation. Our next witness here with us today is Mr. Steve Martinez. Mr. Martinez is the president of Tradewinds General Contracting Incorporated, located in Boise, Idaho. Founded by his parents in 1980, Tradewinds General Contracting has always been a part of Mr. Martinez's life, whether it's completing small tasks as a kid up to framing houses in college. After graduating from college, Mr. Martinez began working for the business full-time, becoming president after 6 years at the company. Mr. Martinez has won numerous awards, including Builder of the Year multiple times from both local and state building associations, and has received recognition from the National Association of Home Builders. Mr. Martinez graduated from Boise State University, home of the Broncos, right, with a Bachelor of Business Administration. I want to thank you for being here today and look forward to our conversation. Our next witness here with us today is Mr. J.D. Ewing. Mr. Ewing is the chairman and CEO of COE Distributing, located in Smock, Pennsylvania. COE Distributing is the largest wholesale office furniture distributor in the U.S. and the Caribbean. Mr. Ewing took over the business when he was just 19 years old and as the sole employee of the company, becoming the third-generation owner. Now, with over 100 employees spread out across 3 states, the company has been consistently recognized among the fastest-growing private companies in America. In addition to serving as a board member for the Community Foundation of Fayette County, Mr. Ewing serves on the National Association of Wholesalers Institute for Distribution Excellence as chairman of the board. Mr. Ewing graduated from Penn State University, where he studied business. Thank you for joining with us today, and I look forward to our conversation. And I now recognize the Ranking Member Chu to introduce the last witness appearing before us today.
Thank you, Mr. Chair. I'm so honored to introduce our final witness today, my constituent, Tom McCarthy, the co-founder and vice president of business development at Motiv Space Systems, which is located in Pasadena, of course, in my district. Tom spent 11 years at NASA's JPL, also in my district, and he is an electronics engineer designing motion control systems for rovers and robotic systems for extreme environments. He then spent 4 years as the director of business development at the Missile Defense Agency before co-founding Motiv in 2014. Motiv was founded on the belief that space-based robotic systems could be produced more efficiently and with a higher level of quality by a small business. And they were quickly proven right. They earned and successfully executed a range of contracts at NASA, including designing the robotic arm used on the Mars 2020 Perseverance rover. They're also the recipients of several SBIR awards from the SBA and are using that investment to innovate the next generation of space exploration. Thank you for joining us, Mr. McCarthy.
And again, thank you for all being here today. And before recognizing the witnesses, I would like to remind them that oral testimony is restricted to 5 minutes in length. That's a big number for us. We want to stick with that. If you see the light turn red in front of you, it means your 5 minutes is up, and you should conclude your remarks immediately. And if you keep going, you're going to hear this. That means stop, okay? And so with that in mind, I now recognize Ms. Davis for her 5-minute opening remarks.
Thank you, Chairman Williams. Distinguished members of the committee, my name is Hazel Davis. I am Vice President, Compliance Manager, and Corporate Responsibility Officer for Jefferson Bank, a cornerstone of the San Antonio community since 1946. With assets totaling approximately $3 billion, we serve the dynamic and growing region of San Antonio-Austin, which encompasses 4.8 million people. We specialize in commercial lending and consumer mortgages. San Antonio, a city where 64% of residents are Hispanic, thrives on the entrepreneurial spirit of 34,000 small businesses and 145,000 sole proprietorships. These businesses are the lifeblood of our economy, facing challenges such as workforce shortages, rising costs of materials, housing affordability constraints, and yet despite these hurdles, we continue to see robust demand for credit. Although higher interest rates have impacted some of our price-sensitive customers. As a compliance officer and advocate for the community, I've witnessed firsthand the profound impact that economic shifts and regulatory measures have on access to credit. Today, I'm before you not only as a representative of a small business, but also as a voice for the Texas Bankers Association, which represents 375 banks across our state, employing over 218,000 individuals. Community banks like ours play a pivotal role in supporting small businesses. We understand the local landscape intimately, offering personalized service and flexible terms that larger institutions often cannot. Our commitment goes beyond transactions. It's about fostering relationships and ensuring our borrowers succeed. This approach not only drives economic growth, but also strengthens the social fabric of our communities. In my opinion, financial literacy remains a significant barrier for aspiring entrepreneurs. In my experience, many start with personal funds before seeking formal credit, often unaware of the long-term ramifications if not utilized appropriately. As a fair lending officer, I've reviewed numerous loan applications where a lack of financial acumen has proven detrimental. Community banks are dedicated to bridging gaps through education and targeted support programs, ensuring that all entrepreneurs have the tools required to succeed. The Community Reinvestment Act is instrumental in our efforts, emphasizing the importance of equitable and fair access to credit. Proposed revisions must strengthen, not dilute, support for underserved communities and foster small business growth. In San Antonio, historical disinvestment in specific areas has left lasting scars, breeding mistrust of traditional financial institutions in minority communities. Through proactive engagement and targeted investments, we work tirelessly to rebuild trust and forge lasting partnerships. However, escalating regulatory burdens and compliance costs threaten our ability to continue these efforts, as every dollar diverted to regulatory compliance is a dollar less reinvested into our community businesses. In conclusion, I urge the communities to consider the unintended consequences of regulatory actions on small businesses by fostering a regulatory environment that supports fair lending access, as well as small businesses such as my institution, and recognizing the unique needs of commercial lending and promoting financial literacy, we can pave the way for vibrant small business ecosystems to continue to grow. Thank you for the opportunity to testify today. I'm committed, along with you, of enabling rather than hindering the success of small businesses across our great nation.
Thank you very much. And let me just say one thing, too, to all of you. You're going to see members move in and out. It has no effect on your testimony or anything. We've got other hearings they'll go to and come back. So that's the reason you may see that. Next, I want to recognize Mr. Martinez for his 5-minute opening remarks.
Great. Thank you, Mr. Chair. Chairman Williams and distinguished members of the committee, thank you for the opportunity to testify on the current economic landscape in America. Housing is by far the largest single expense for the American household, and rising costs are putting the nation in an ever-worsening situation. A 2024 report by Harvard's Joint Center for Housing Studies found that a record-high 22.4 million Americans are paying more than 30% of their income on rent, and more than 12 million are paying more than half of their incomes. A newly released Housing Affordability Index by NAHB shows that in the first quarter of 2024, 38% of a typical family's income was needed to make a mortgage payment on a median-priced new single-family home. Shelter inflation and rent and ownership cost is still rising well above a 5% rate, driven in large part by a nationwide shortage of about 1.5 million housing units. The only way to tame inflation and ease the nation's housing affordability crisis is to build more homes. In order to increase the inventory of a single-family home and multifamily housing, we must remove more barriers, regulatory barriers, labor barriers, and supply chain barriers that are preventing home builders from increasing housing production. Regulatory barriers, which include complying with building codes, make up nearly 25% of the cost of a single-family home and more than 40% of an apartment home. Without adequate review or consideration of how it will affect home buyers or renters, HUD and USDA recently issued a mandate that will require all HUD and USDA financed housing to be built to the 2021 Energy Code. This will do little to curb overall energy use, but will worsen the housing affordability crisis and hurt the nation's most vulnerable hunters and renters. It will also compel more buyers and renters to stay in their much older, less efficient homes. More concerningly, the Federal Housing Finance Agency is considering applying similar standards to those adopted by HUD and USDA for homes financed by Fannie and Freddie, which provide 72% of the financing for new home purchases. This would set a de facto national energy code, severely disrupting new home construction, increasing the housing supply shortage, and negatively impacting affordability. The adoption of this 2021 Energy Code can add $31,000 to every new home. In my home state of Idaho, every $1,000 that you raise the price of a house, 800 households are priced out of the market. All regulations should be designed with small business and their consumers in mind and should consider the true real-world cost of these regulations. Labor barriers are also contributing to the housing affordability crisis through higher home building costs and construction delays. In the construction industry, a shortage of skilled labor means that we can expect almost 400,000 open jobs in any given month. And NAHB research suggests that we will need 2.2 million workers in the next 3 years to meet existing home building demand. This places upward cost pressures on existing home prices and rents and pushes the dream of homeownership out of the reach for potential homeowners. Policymakers at all levels of government can help by supporting full funding for building and construction trades education, including the DOL's Job Corps program. Since the pandemic, the cost of building materials has surged 38%. Building materials supply chain barriers are harming housing affordability as the cost of lumber, steel, aluminum, and other imported materials and equipment increase price volatility and drive up housing costs. Of particular concern currently is the price of the availability of distribution transformers. Since February of 2020, the price of distribution transformers is up 72%, and NAHB's members report that wait times for transformers range from 12 to 36 months. One of my recent condo projects was facing a potential delay of 18 months because we couldn't get the right transformer. We were forced to modify the project at a cost of an additional $60,000 on just 6 condos. These added costs are pricing local Idahoans out of the dream of homeownership. Congress must help ease supply chain barriers by investing in the domestic production of sorely needed distribution transformers. The current economic landscape for the home building industry is challenging without question. It is a generational policy challenge that we can solve. We must solve it. And it begins with continually removing barriers to increase housing production. Thank you again for this opportunity, and I look forward to your questions.
Thank you. I now recognize Mr. Ewing for his 5-minute opening remarks.
Thank you, Chairman Williams, Ranking Member Chu, and members of the committee. Good morning. Thank you for the opportunity to testify at today's hearing on the state of the small business economy. My name is J.D. Ewing, Chairman and CEO of COE Distributing, a national office furnishings wholesale distributor and contract manufacturer based in Fayette County, Pennsylvania. COE Distributing is a family-owned business that has operated since 1947, when my grandmother started the business in a basement of a tavern out of the necessity to support her 2 sons. I'm the 3rd-generation owner of COE Distributing after taking over the business at age 19 in 1989. At that time, I was COE's only employee. Through an enormous amount of hard work and dedication from a number of dedicated and talented team members, COE has grown to over 120 employees with distribution centers in Charlotte, North Carolina, Houston, Texas, and Southwest Pennsylvania, where our corporate headquarters are located. At COE, we've cultivated and continuously strive to grow a robust culture which is fundamental in the success of our and any small business. We take immense pride in fostering an inclusive environment where input from all team members at every level of the organization is not only encouraged, but actively sought. We're also proud to provide our team members with extensive benefits and career development programs, including health and retirement benefits, formal profit sharing and 401k plans, quarterly cash bonuses, and personal benefits such as financial workshops and volunteer paid time off. In addition, we're the official employee engagement partner of the Pittsburgh Penguins and hold a monthly peer-to-peer recognition program awarding a game-worn Penguins helmet to the employee who embodies COE's core values of customer service, respect, teamwork, quality, safety, innovation, and transparency. This and other employee engagement-focused efforts allow our unique workplace culture to grow stronger every day. Today, we see many challenges in the economy, including rising costs and supply chain disruptions, looming tax increases on small business, and compliance costs with new regulations. Although the country has recovered from the pandemic, many of these same supply chain challenges we faced then are beginning to reemerge today. Major ports are again beginning to see severe backlogs due to congestion and delays. The disruption in the Red Sea and the Suez Canal due to terrorist activity has had a material impact on shipping costs and delivery time, adding up to 4 weeks to some shipping lanes. This disruption has led to a substantial increase in the costs of shipping containers, with the average cost of a shipping container increasing over 3 times in the past 90 days alone. In April, a container from Asia to the U.S. was approximately $2,500. By July, now, the cost is over $8,000 and expected to rise to over $10,000 in the coming months because of the peak season that we're now entering. Many home furnishing retailers have already implemented ocean freight-related surcharges to their goods, reminiscent of the COVID supply chain consequences. While small businesses like mine are already seeing the impact of this supply chain disruption, it will soon impact the entire economy as it did 2 years ago. In addition to rising costs, small businesses are also seeing their near-term challenge of potential tax increases. The 2017 tax reform reduced taxes for small businesses through the reduction in tax rates and the creation of the 199A small business deduction. This tax cut helped us reinvest in our workers by giving us more resources to hire, raising wages, and provide benefits and training, as well as devoting more resources toward expanding the business and contributing to our local communities. Not only does this looming expiration of these tax reforms threaten our ability to continue reinvesting in workers and the communities, but it also makes it more challenging to compete with large businesses, especially in attracting and retaining talent given today's job market. A longer-term tax challenge for family-owned businesses like mine is planning for the death tax, which makes businesses vulnerable to acquisition by large corporations or foreign entities and often forces family-owned businesses to liquidate a portion of the business or the entire business to pay this death tax. Small businesses are also disproportionately hit by regulatory requirements. As a small business owner, the time and cost to keep current on these issues is overly burdensome from a time and resource standpoint. While regulations are inevitably a cost of doing business, we must ensure together that all businesses are not unduly impacted by red tape and disproportionate costs. Thank you again for the opportunity to testify today, Small Business Committee. I hope my insights on the economy are helpful, and I look forward to your questions.
Thank you very much. I now recognize Mr. McCarthy for his 5-minute opening remarks.
Good morning, Chairman Williams, Ranking Member Chu, and distinguished members of the committee. Thank you for the opportunity to testify in this hearing about the current economic landscape in America. I appreciate the opportunities that allow a small business like mine to participate in a setting like this in our nation's capital. Special thank you to Congresswoman Judy Chu, who has worked tirelessly to support us and thousands of small businesses achieve success and thrive in today's economy. My name is Tom McCarthy. I am a co-founder and the Vice President of Business Development for Motiv Space Systems located in Pasadena, California. We support the civil, national security, and commercial space sectors by enabling maneuverability in complex environments, primarily in space. Over the past 10 years, our company has grown from a team of 3 people to almost 80 employees just last year. In preparation for this hearing, we looked at our subcontractor list, and the results were pretty remarkable. Throughout our history, Motiv has utilized almost 800 suppliers across 42 states and 4 countries. Small businesses have a larger economic impact than most people realize. We started the company because we believed that we could develop and build space-based robotic systems more efficiently with a higher level of quality and capability than our competitors in a globally competitive aerospace market. And we were right. We successfully won and have executed multiple NASA contracts for a range of missions, including the robotic arm and science camera systems on the Mars 2020 Perseverance rover. From our beginning, innovation has been crucial for thriving in a highly competitive aerospace environment. Our company's long-term health relies on consistently incorporating new technology for our mission partners. This means continuously expanding our research and development. I'd like to discuss a few topics related to small business in the United States and our relationships with various government partners today. With regard to the Small Business Innovative Research Programs, we have developed a chart that shows how SBIR contracts have been fundamental to innovating our technology. I think that may be how we got invited today. But the key here is we don't live off the revenue of SBIR contracts. We convert those SBIR investments into seeds to grow new commercial products and close technology gaps for our partners to enable new and exciting scientific missions continuing the pulse of scientific discovery. We have won a total of 18 Phase 1 and Phase 2 SBIR awards and leveraged those awards into 8 commercialized program awards. And then historically, that has amounted to about 25% of our revenue over the course of business. As you look at the SBIR reauthorization next year, I would encourage you to absolutely keep this vital program alive. Talk with the small businesses in your community who have leveraged these programs, and then engage with those who are not aware of them. With regard to consistent, predictable budgets, many of our customers are dependent on federal budgets, and the effects of budget delays to those customers are amplified within the small business community. Over the last decade, I believe every single fiscal year started off under a continuing resolution. CRs only delay programs and forces our partners to make premature decisions, much like we saw with the Mars sample return campaign. The aerospace industry has faced worsening supply chain disruptions and rising prices due to recent events. And on top of that, the cost and lead time for raw materials have doubled, and our suppliers have had to significantly increase their prices, and that ripples through our community as well. With regard to the research and development tax credit, I would also like to raise the importance of the R&D tax credit that has expired. This is extremely important for a small business like mine that operates on tight budgets. I've heard the discussions in press related to Fortune 500 companies, but rarely from the small business perspective. Let me be clear, the R&D tax credit allowed us to reinvest into further R&D and other business operations to encourage innovation and allow us to tackle more ambitious projects. Investing in R&D allows small technology businesses to develop new products and improve existing ones, helping us stay competitive in the global market. In conclusion, small businesses are leading contributors to the economic success of this country. We cannot take this lightly and must consider all the tools in the toolbox when it comes to incentivizing the backbone of this great nation, which are our small businesses. Again, thank you for inviting Motiv to participate in this hearing and to discuss how our small business is literally allowing our nation to do things out of this world while bringing jobs and economic prosperity to our hometown. I look forward to today's dialogue and answering any questions you may have. Thank you.
He was back, and those are great testimonies, and we'll get started now, and I'll recognize myself for 5 minutes. This committee has routinely heard from small business owners that Bidenomics has not been working for Main Street America. As we've seen the cost of capital increasing in this high interest rate environment, small businesses have become increasingly reliant on credit cards, which carry high interest rates, than traditional bank loan to finance their operations. I'm very concerned that we are approaching a cliff with this mounting credit card debt piling up, but that's a conversation for another day. However, it is not just interest rates that are increasing the cost of borrowing. Regulations add significant cost to financial institutions, which are ultimately passed along to their customers. Ms. Davis, first question. You previously served as compliance officer at your bank and are very aware of the impact that regulations have on the price of various financial products. So can you tell us how increased compliance burdens are negatively affecting the access to capital in your community, and which customers are most impacted by this increased cost?
Thank you, Chair. Yes, related to compliance costs, as I said in my statement, every dollar spent takes away from an investment in the community, either through a loan or through direct capital investments to improve those LMI individuals. Specifically related to the increase in costs, it costs the same amount to give a $5,000 loan that it would a $100,000 loan, but the cost ratio of what has had to be implemented is more proportional to the smaller dollar loans. So it tends to affect our low and moderate income borrowers the most, because they are those that are looking for the smaller dollar business loans.
Projected that the housing industry will need an additional 500,000 workers annually to meet the demand of the market. This is an unfortunate reality for many industries across the country. When I served as Secretary of State of Texas, I was charged with overseeing the infrastructure projects in the state, and eventually we had to delay a bunch of these projects we had planned because we couldn't find enough qualified welders to do the work. Whether it's large infrastructure project or building a new home, delays in work are drained the local economy. So, Mr. Martinez, how has a lack of skilled workers impacted your business?
Absolutely. Thank you, Mr. Chair. Idaho's a small state, and so we compete with labor from states like California, Washington, and Oregon. We aren't able to find the labor that we need to complete our projects, and when we do, I feel like we're overpaying for the quality of work that we're getting. We do high-end residential, and so in order to find the qualified worker that we need to do the project that we're talking about, we either have delays in time, we have delays in quality, we have a delay in trying to get somebody at a market rate that we feel is appropriate, and we continue to work with the Job Corps, we continue to work with the Pell Grants, we're working with the high schools. We're trying to find a way to funnel kids into our industry in a way that provides an incredible opportunity for them. It's a shorter route in Idaho. Our governor worked on lowering the requirements to get a journeyman's license because we just don't have enough bodies. And the barriers to entry are so high that we're continually working on making it easier, fast-tracking, trying to get these kids in our industry.
That's good. Mr. Ewing, the story of your family-owned business really hits home for me. I've been in the car business for over 52 years, still am, and I took my father's business over, and now my daughters are third generation, and they're currently running its operations back in Texas. And as we're rewarding as it is, as rewarding as it has been to keep this business in the family, it comes with many unique challenges. So my question is to you, can you talk about some of the issues that your businesses face, much like mine, as it's transitioned from generation to generation?
Thank you, Mr. Chair. Our business, thankfully, did not have a transition challenge. I've been running it for 35 years, and my dad's still around, but he's not involved in the business. You know, the challenge that we have in the business today, I touched on the rising costs, particularly in the supply chain, and you get a 3 to 4x increase in the cost of moving product that you need for inventory or products that you need to build houses. That is a very difficult situation to react to and pass those costs along, particularly as a small business. So that is the biggest challenge that we have today, in my opinion, is reining in costs and trying to understand how we can react to them appropriately and not overburden our customers at the same time.
That's a big deal. You just can't pass everything on to the customer.
No, sir.
It rolls back on business. So with that in mind, I now recognize the ranking member for 5 minutes of her questions.
Mr. McCarthy, thank you for being here today to share your experience as a high-tech small business. I was so impressed when I visited your facility last year and was able to see how remarkable Motiv's success and growth has been over the past decade. Can you tell us more about Motiv's story, how you came to find success in Pasadena and build a customer base nationwide? And also, I was able to see your robotic arm. Why was that so innovative and allowed for the Mars Perseverance rover to survive the harsh weather conditions on Mars? And also, actually, can you address this issue? We talk a lot about space, but do space programs help us here on Earth? Space programs have routinely returned some of the most advanced technology on the market to consumers. So can you talk about the next generation of products that will be coming from these small businesses to us?
Thank you, yes. So I think in terms of Motiv success, I think the primary function that has made Motiv successful in building up and surviving and thriving over the last decade is really staying true to a particular common thread. And for us, it's the robotics, it's the motion control, and having distilled expertise and constant workforce labor development in order to deliver that to our customer. We have to be differentiating. We have to invest in ourselves constantly. We have to develop new technologies. We're creators and inventors all in a small building and or a couple of buildings. And so that's important to us. And maintaining that energy, staying hungry and pushing and engaging with our customer base is the value proposition. And it makes us good partners to those groups. And so I think that's primarily key to our success. And so some of these programs that I talked about in my testimony, or the predictable budgets for our customers and making sure that those are operating on a certain cadence, allow us not to engage in disruption, allow us to keep working in those arenas.
And again, why was your robotic arm for the Mars Perseverance rover so innovative and allowed you to survive on Mars?
And so when it comes, what's really interesting about the things that we work on, we look at the landscape of what NASA or other government agencies want to do in space. And what we try to do is we try to predict from a technological position. We try to understand and anticipate what they're going to need. And that's where our investments go, is to hone those skills and then apply them and test them and validate them so that the reliability, the quality is high, and the customer is going to get a good, solid product that they know is going to work year in, year out. And fortunately, we've had that success on the programs that we've supported in the Mars activities, and that's been very rewarding for us. You asked another question, I think, which was related to how does space benefit the rest of us? Space, it's interesting. Sometimes we feel very disconnected to what happens in space, but the reality is we use it every day. It's a part of our GPS activities. Most of the functions on your phone have some origins or some byproduct that feeds into its utility through a space capability. Our weather predicting comes from space. Our early warning systems from solar activity that could disrupt networks, power stations, distribution centers, and that kind of thing, come from space observations. So space, whether it's a pursuit for science or it's a pursuit for economic benefit, commerce, utility, is really valuable. And it's easy to overlook because we're often doing things very terrestrially, if you will, but it's a huge contributor to the success of our.
And let me follow up on SBIR itself, because you have a remarkable 18 contracts with SBIR, which of course is the program administered by the SBA. How do SBIR grants represent an opportunity for the American taxpayer and the federal government to see a return on their investment with these small businesses? And also, it was only reauthorized for 3 years in 2022. When it comes around next year, should we consider a long-term extension or even permanency?
So I'll ask the back half of that first. Yes, please. I think long-term extension, permanency of that program is extremely valuable. I think it's something that for businesses that are in the high-tech arenas and are looking to serve different government agencies and help them close technical gaps, it's extremely valuable. Sometimes gaps exist in conceptual mission or technology developments, and it's really that distilled talent that resides within America's small business force that sometimes is able to execute those functions. And that then makes future missions, future technologies, future capabilities viable. So I think that SBIR program has shown its worth by those investments turning into the things that we see on a daily basis.
Thank you. I yield back.
He yields back. I now recognize Representative Lukemeyer from the great state of Missouri for 5 minutes.
Thank you, Mr. Chairman. My remarks or my questions today are going to be with regards to tax cuts and regulations. And, I think the tax cuts of 2017 showed that leaving money in people's pockets, leaving money in businesses' pockets so they can reinvest it as they see fit, whether it's to expand your lines, to go expand your business, pay employees, buy more product, whatever it is, seems to have worked and generated a revolution in entrepreneurship during the 16, 17, 18, 19, 20 year cycle, where suddenly we went from more employees and jobs to over $1 million more jobs and employees in just a short period of time. So, Ms. Davis, you probably, quite frankly, as a former banker, you've got the toughest job in a bank as a compliance officer. I empathize with you. It's a tough job, especially with the rules and regulations pouring out of Washington and the cost of complying with those. But my question today is with regards to the tax cuts. You see it every day with the businesses that you financed in the bank. Have you seen those businesses take those dollars and reinvest them, or do you see them sticking in their pocket and running off and vacationing with those things?
I think most small businesses are members of their community, so they're going to take those dollars that they've been able to accumulate and reinvest them, not only to grow their business, but also in their employees. A lot of them provide additional services, volunteer hours. I mean, again, small businesses really are the lifeblood of all of our communities. And so when they have dollars available, they can expand their businesses, but very much to your point.
You got to remember, too, those are their dollars. They're not the government dollars. Mr. Martinez, the other three of you here, you live the American dream, started from basically nothing and built your companies. I admire you all beyond what you know. Tell me, whenever you got the tax cuts in 2017, what did you do with those dollars? How did it affect your business?
Yeah, absolutely. Thank you, Representative. Our business relies on debt. We have to go and procure debt in order to do more projects. And so we were able to, and with that debt comes investment that we have to make. It comes with dollars that we have to come up with from a down payment perspective. So when we're doing lots, when we're doing a subdivision, when we're doing an apartment project, we have to come up with that additional money. And that was more money in our pocket to continue to grow the economy in our local market. It allowed us, it fast-tracked us an opportunity to be able to do projects that we had on the shelf that had been mothballed, waiting on funds to come in. And so it absolutely projected our company forward in those years after that.
Mr. Ewing, same question to you. How does the tax cuts affect you? And I would argue that since the pandemic, it actually is underpinning the growth of our economy by allowing businesses to keep their own money and then reinvest as you see fit. How did that tax cut affect you and your business, and how are you managing those dollars today?
Thank you for the question, and you mentioned it, the reinvestment into our team members through raising wages, additional training, creating a better environment for them is really where we focused. Our business is also built on inventory and having product on the shelves, so we were able to expand the amount of inventory that we had in our facilities, in our distribution centers, and therefore we could react to the market and our clients quicker. So it's really about reinvesting into the company, mainly with the people.
Mr. McCarthy, you talked about the research and development tax credit. That's a huge deal for small business, especially in your situation where you're doing a lot of research and development. The continuation of that's going to be very, very important. We had tax cut. This 2017 tax cut is coming up for renewal next year. It's a really, really big deal that we make sure that happens. Can you talk about the impact on that?
Yeah, absolutely. So just like my colleagues here said, the reinvestment is critical to success. In the past, when those credits have been available, we've been able to put that into our facilities, put that into capital equipment, put that into capability. And those become, again, differentiating tools for us going forward and allow us to grow our company, train workforce, or, again, plan for the future. So we try to develop a roadmap on how better to serve our customer base. And that's a constant activity. And so those give us one more tool, just like other programs, to help us execute.
Thank you very much. Mr. Martinez, I think you talked about the 2021 energy code that is very difficult to comply with, and I've got a limited amount of time. Can you just very quickly give us a little brief problem that you have there?
Yes, my concern is, and I very limited time, the state of Idaho has done their own energy code that makes sense for Idaho. Through the negotiated rulemaking process, we've had the opportunity to take things out that don't make sense and add things that do make sense. With the national standardization of code, we're now, I feel like, taking states' rights away on their ability to make changes on the energy code.
Okay. Thank you very much. My time's expired. Without you.
Gentleman yields back. I now recognize Representative Skolton from the great state of Michigan for 5 minutes.
Thank you so much, Mr. Chair, and thank you to our witnesses for coming here today and for all of your incredibly valuable testimony. So proud of the small business footprint in my district. Actually, 99% of businesses in the state of Michigan are classified as small, if you can believe that. When I speak with businesses in my district, rising costs are the biggest concern that they have. Many of them cite supply chain bottlenecks, concentrated market power as a primary cause. My first question is for Mr. McCarthy. In your testimony, you emphasized how important it is to ensure small businesses can compete with larger companies. Agree. In addition to funding mechanisms such as R&D tax credit, are there other ways Congress can encourage competition to keep prices low throughout the supply chain?
I think one thing that we have seen that's been difficult is that coming out of COVID with the supply chain issues, we saw that buying power changed dramatically. Speaking to our particular supply chain, semiconductor industry, what we started getting from the sellers of semiconductors was different requirements on how much you could buy. Prices went way up. Lead times got excessively long. And then in some cases, there was no guarantee of the price that you were actually being quoted as being the final price. I've never seen that before in my life, my entire career, where there's an unstable price basis. And so I think something needs to be looked at there. And I don't know if that's all COVID related or just the global economic situation. But that really hurts the buying power for small businesses who are trying to be innovative and are trying to compete against a variety of entities.
Thank you. That's really, really helpful. Another top concern among small business owners in West Michigan is the need for skilled labor. Some small business owners tell me they've had to reduce hours and services because of the labor shortages they face. Our country has had low unemployment for several years now, a low unemployment rate for several years now. Usually a very good thing, right? But we know that our small businesses are looking for the workers that they need. This has benefited our economy in some ways. However, unique circumstances brought on by the pandemic have meant that small businesses are now trying to grow without a workforce that can meet the demand that they have. My next question is for Mr. Martinez. Are there additional factors that you see that are contributing to the labor shortages and actions that we specifically in Congress can take to meet those needs?
Yes, absolutely. So as we're facing a shortage of labor, the Job Corps funding, the $1.2 billion Job Corps funding got cut this year. And we were jumping up and down saying, we're trying to train our workforce and you cut Job Corps funding. It did get reinstated, fortunately, and it did get made reallocated for next year. But you have to remember, through Job Corps, through Pell Grants, we have to be able to fund these programs that are funneling kids into the trades. And not even just kids, people that are retraining our military, those that have been in the correctional system. We really are trying to retrain a group of people. I would say the last part of this is not everybody's made for college, and we keep pushing that narrative, and we're finally getting kids that are saying, you know what, I can go for 2 years, I can work the whole time I'm doing that 2 years, make money, and come out with a trade or a skill set. But now you got to convince their parents that they're not going to college, and I think that's the next hurdle that we have to jump. So I think we have a cultural shift that needs to be made at the national level.
I couldn't agree with you more. I've got a great bill, the Honoring Vocational Education Act. Many of my colleagues here are co-sponsors. It's a bipartisan bill, and it actually changes the way the United States Census tracks what constitutes higher education. Currently, you only get to check that box if you've completed a 4-year college degree. I know the vocational training centers around my district. I go in and I see how these auto mechanics are trained. That's higher education. I couldn't do that work. So I completely hear you. I think more than funding, which we absolutely need, there has to be a cultural shift around this in the United States, and I think it comes and starts by honoring all different types of education as being higher education. So one very small thing we're trying to do here, but I appreciate you bringing that up. Thank you. I yield back.
Lady yields back. I now recognize Representative Van Dyne from the great state of Texas for 5 minutes.
Thank you very much, Mr. Chairman. I continue to hear countless stories about how this administration has hampered the ability of small businesses to grow due to its reckless spending and taxing and overregulating. Throughout President Biden's administration, federal agencies have finalized, get this, 996 new regulations. It costs about $1.7 trillion to American businesses. Listening to small businesses in my district, that is a cost that they can't absorb. It must be passed down to the consumer. And this isn't so these companies or these company owners can get rich, but it's just to be able to survive in a burdensome regulatory environment. And this is part of the reason why earlier this year, this committee passed my bill, the Small Business Regulatory Reduction Act. And this bill requires that the Small Business Administration ensure for each fiscal year that the cost to small businesses of the administration's rulemaking is not greater than zero, which also requires the SBA to issue a report on any regulations issued by other federal agencies that impact small businesses. That's the role of the SBA, to actually be a champion of small businesses. And I look forward to seeing this bill move forward and to working to ensure that Congress reins in on the power of the out-of-control, regulatory glutton executive branch. And I also look forward to continuing the work with this committee to strengthen small businesses across the country. I appreciate all of the witnesses being here this morning. Along with serving on this committee, I also serve on the Ways and Means Committee, which has established 10 tax teams in April to study key tax provisions from the 2017 Trump tax cuts set to expire in 2025, and to identify legislative solutions that will protect Americans from President Biden's multi-trillion-dollar tax increase. I'm going to ask basically, I'll go ahead and start with you, Ms. Davis. Can you tell me how the uncertainty in the tax world impacts your planning for the future?
Uncertainty in the tax world, specifically, I can't answer that. From a regulatory perspective, what I can tell you is that when small businesses don't have additional capital available, they're unable to support their communities. And so providing tax credits and relief to small businesses allows them to thrive as well as our financial institution.
Appreciate that. Mr. Martinez?
Yeah, thank you. I think, as we all know on this committee, business doesn't do well with uncertainty. And so we start to hoard cash when we feel that we've got a wave of regulation coming along. The state of Idaho, Governor Little enacted a bill that for every one piece of regulation, two had to be stricken from the legislature. In doing so, that in a year of post-COVID, we had a record surplus of $2 billion. Now, that might not sound like a lot of money for some states where, you know, the police department's budget might be $2 billion, but in a state of 1.5 million people, a $2 billion surplus is a huge number. And I think we're seeing the effects of some states taking that anti-regulation or deregulation stance, and Idaho has by far become the most deregulated or unregulated state. Some may argue that's a good thing, and some may argue it's a bad thing, but we've seen the consequence of that with a 99.2% small business community. There was explosive growth in Idaho.
Can you also, Mr. Martinez, I wanted to expand on this. In 2022, I hosted a program called the Texas 24 Works, and it brought together high school and middle school counselors. We took them around the district, and we showed them, like, there could be great careers that can be had where you are making, six figures without a college degree. Can you talk about how the career and the technical education, vocational training, and apprenticeships can play a great role in addressing the labor shortage?
Absolutely, thank you. We have partnered with the high schools as well. We brought in high schools through the Home Builder Institute that does receive funds from Job Corps, has created a curriculum to bring kids into the trades. We started bringing them in. We have what we call the Pray to Homes for Pets, where they're building these dog houses and engaging them. They're excited to work with their hands. It's essentially replaced shop that got, cut out of the school program so long ago. And it's incredible as we meet with these youth, the excitement they have, the pride of doing something with their hands. So it's just getting the hook in and engaging them, and they see the potential for the growth is great. So.
In the 20 seconds I've got left, Mr. Ewing, would you like to expand on any of the questions that I've asked?
Just reinforcing the uncertainty creates a hoarding of cash and resources, which doesn't allow us to invest in our employees and the business. So that uncertainty is a challenge.
Great, thank you very much. I yield back.
Lady yields back. I now recognize Representative McGarvey from the great state of Kentucky for 5 minutes.
Thank you, Mr. Chairman. Mr. McCarthy, I'm going to start with you today, talking about the SBIR program that is known as America's Seed Fund. Not only is it a vital program for research and development, but it also awards small businesses like yours with access to the federal government as a partner. The federal government must fulfill its purpose and invest in our communities, our constituents, and their ideas. Mr. McCarthy, your company has received both Phase 1 and Phase 2 SBIR awards, but Phase 3 is especially important because it encompasses two of the sort of primary objectives of the program, the commercialization, transition of technologies. Have you had any trouble transitioning from Phase 2 of the program into Phase 3?
So actually, we've been awarded a couple of Phase 3 programs, and in my testimony, I referred to the Phase 1 and 2 because those are the allocated funds, whereas the Phase 3 is the programmatic funds. It's the customer funding that utilizes that connection from the Phase 1s and 2s, the success from there, and then bridges the gap to the development, the execution, the production of the technology into a regular use case. So we have had some success there, and I think, to your point, it has helped us develop that relationship stronger within the federal agencies in terms of those who want to utilize that technology. So I think that's been very successful.
Is there anything else helpful that we could do in these types of instances, like a centralized database for all the projects in Phase 3 that eligible agencies could use to shop for their needs?
That's an interesting idea. I think socializing that is a good thing. I usually find that there's always a re-education, even with customers, making sure that everybody's communicating about what the benefits are of the program. People who haven't used it before, haven't utilized it even as a monitor of the program, they may be somewhat unfamiliar. So I think anytime there's more opportunity for education and awareness, I think those are wins.
Thank you very much. I'm going to switch topics here a little bit. Going to Mr. Martinez. Appreciate all your comments today. Enjoyed your written testimony as well, and obviously agree that we should all continue working to lower costs. I really liked what you said about promoting careers in the skilled trades to address the labor shortage here, something that we've worked on in multiple committees here. And I love the line in there where you say America should have a choice in securing safe, decent, and affordable housing. And I think that's something, affordable housing. I think we're ready for a Marshall Plan of affordable housing, not just in my community, but in this country. What I want to go to for a second, though, is in your written testimony, you said that increased regulations, especially energy building code requirements, are making it harder and harder for home builders and multifamily developers to build housing that is attainable and affordable for American families. But when I went to your website, which is amazing, the homes are incredible on there. If you guys haven't checked out this website, they're absolutely stunningly beautiful homes. You have advertised an incredible commitment to sustainability. In fact, it says on your website that, quote, commitment to sustainability is woven into every aspect of our construction process. Quote, we strive to minimize our environmental impact while maximizing energy efficiency and incorporating eco-friendly materials that set the standard for sustainable luxury living. And quote, we are leading the way in sustainable luxury home constructions. And so this is not gonna, I don't want this is not a gotcha question. It's really a question. When we have these, you complain about the regulations, but then obviously are building homes, I'm guessing because people want those. It makes having that home cheaper and more affordable. How do we square that with the opposition then to the regulations that are encouraging that efficiency for every American who does deserve and want to have a home?
I actually really appreciate this question because I get it asked at the legislature all the time at the state level because nothing I build is affordable or cheap. And I'm always advocating on the first-time home buyer. What we don't understand is if we don't have a first-time home buyer who is then able to sell their home and increase their wealth to become a second-time home buyer and a third-time home buyer, eventually I lose clients. So selfishly, I'm trying to advocate on behalf of just getting people into a home initially who then will turn into customers down the road. But I was a first-time, we all were first-time home buyers in this room. And there's a difference of a mandate and giving people the choice. My clients can afford to choose some of those things. They're willing to pay for those things. But if you have somebody that is trying to get in their home for the first time, and it's death by 1,000 cuts, it's not just the energy code. The energy code is a low-hanging fruit, but it's every jurisdiction from the local to the state to the national that ends up blowing that budget out of whack to where people can't afford their home.
We're out of time. I'd love to ask you more questions about this, particularly for first-time home buyers. As competing committee schedules go up here, I have a bill up in another committee, but I really appreciate your testimony, Mr. Chairman. I yield back.
Gentleman yields back. I now recognize Representative Malloy from the great state of Utah for 5 minutes.
Mr. Martinez, I was going to ask you something along the same line, so let's just continue. You said that a de facto national energy code starts pricing households out of the market. I represent Utah's 2nd district, and Idaho's #1 in being just north of Utah. So we have a lot of the same housing issues and affordability issues. If an energy code isn't mandated by the federal government, do you have faith that the state of Idaho can figure out how to build homes that are right for Idahoans?
Yes, thank you for that. I think when you talk the body of codes, it's not a federal code. It's actually a private group that puts these codes. There's the energy code, the residential code, the commercial code, the remodel code. And so understanding kind of how this body puts it together, as you can imagine, lots of special interest. You can only get to this level of insulation value by using my product, so I'm advocating special interest on my product. Versus the state of Idaho, which is also in the same climate zone as Boston, Massachusetts, doesn't quite make sense on some of the things. You know, it's 108 degrees today in Boise. I think probably really similar.
But it's a dry heat.
Yeah. But the point is that we're involving the professionals. So we're sitting around the table with the building officials, with the state officials, with the builders, with the remodelers, and we're coming to a consensus of what makes the most sense. So I absolutely believe that as a state, we can regulate ourselves better because we are looking at all of the pieces. We don't have our blinders on of what gets us the max amount of energy efficiency. We're looking at how do we even get people in these homes to begin with?
Yeah.
What are easy upgrades down the road? What are things we can't upgrade down the road? So,
I agree. I admire your dedication to sustainability. I think sustainability is a great goal. I don't think the federal government needs to mandate it for home builders or states to figure out how to do sustainability. Yeah, go ahead.
real quick, I think the federal government's regard is in life safety. So I am not against building code and the things that progress building code for life safety. I've got a great relationship with the fire officials, with building officials. I think energy is a separate concept and an idea, and I agree with you there.
Thank you. Ms. Davis, you talked about self-funded entrepreneurs in your testimony and how making small loans and large loans cost the same amount, but it ends up being more burdensome to do the small loans. I have good relationships with the regional banks in Utah, and one of the things they've expressed concerns about to me is that they don't always recommend federal small business programs. They specialize in Main Street businesses. They're investing in their communities, but the programs that we're in charge of that are supposed to help small businesses have so much red tape and such an upfront cost and barriers to entry that they don't always recommend them to the same businesses that they're designed to help. What has your experience been with that?
Thank you. That's a great point. To many of our customers, it's more expensive to go through SBA loan programs and other federal programs because there is so much red tape. Our experience is that we're able to meet those needs better, faster, cheaper, and, we don't have prepayment penalties. We don't have, you can pick up the phone and you can call someone directly. You don't have to go through specific representatives.
Yeah. Thank you. That squares with what I'm hearing from folks in Utah, and that's something that we as a committee need to be aware of and be addressing, that we can design programs, but if they don't work for the people they're designed for, we're wasting our time and the taxpayers' money. Mr. Martinez, I want to come back to you for a second. You're talking about skilled labor and working with high schools, and I know not everybody needs college, but over the last couple of generations, I think college has become the way people get into the workforce, the way they find jobs. How are you finding laborers for your industry?
Yeah, I think the Band-Aid to the fix is immigration, right? Immigration through the visa program, the work visas is definitely a Band-Aid, and I think that's one, unfortunately, that just doesn't get enough attention. Really, it's identifying now this youth group that, again, wouldn't really go down the college route. In fact, I just talked to a guy the other day that is he's got all 8,000 of his hours to become a journeyman for HVAC and just hasn't finished his schooling.
Yeah.
So they're putting in the time, but the requirement from the schooling perspective is so hard that it's a barrier to the entry.
Yeah, I worry about Main Street businesses that have labor needs and people are willing to do it, but they don't have a mechanism for connecting with each other. Mr. Ewing, I had questions for you, but I'm out of time. Thanks for being here. Mr. Chairman, I yield back.
Back, I now recognize Representative Tanadar from the great state of Michigan for 5 minutes.
Thank you, Chairman Williams. Thank you for this hearing, and appreciate all of our witnesses here. I want to start with SBIR. When I started a small technology business way back in 1990, one of the things that I did was I came across the SBIR proposals, requests for proposals, and I was excited. There were so many opportunities, innovative opportunities for me. As a PhD scientist, I was excited to see and be able to solve some of those problems. And so I wrote my first phase 1 grant myself, and but I realized the odds were so high back then. I don't know what they are today. back then I was told that there is a 1 in 25 chance of me winning a Phase 1 SBIR grant, Phase 1. Is that true today, or is it better, worse?
It's definitely competitive. I think that what we see in our area is maybe it's closer to 20 to 20% chance of success is pretty typical. But I think it goes to the competitiveness and in the value proposition and so forth, and answering the call, understanding the fit of your technologies or the science you're trying to secure and understand, research. So I think it would be great if that program could be expanded. That'd be amazing. To offer more opportunity, because I'm sure there are plenty of excellent proposals that are submitted but aren't funded just due to the limitation of what the pool is. But it definitely is competitive.
Let me stop you there. But so what I noticed again was the competitiveness of it. So in 3 years, we will be, or in 2025, we'll have to reconsider in terms of renewing this. And I see no downside to not only renewing this program, but making it permanent, because it is the small businesses that are responsible for most of the innovation in technology. And these innovations are something that is needed. And I was later on able to get other similar grants, and while I was still running my technology business, I got my last patent on electric batteries in 2016. And after that, I said, I want to go help others and help other small businesses, because the small businesses in Michigan is one of the most innovative state in the country, and our small businesses are, one, they do not know about many of the SBA programs, including don't know much about the SBIR. It's really a best kept secret. It's not marketed, it's not talked about. So many innovative companies do not know that. Secondly, there are not enough grants available. And thirdly, there seems to be a huge shortage of highly skilled engineers, scientists that small businesses could hire. And I would like any of you to comment on this. But this is stifling innovation in America. This is hurting America's ability to stay on the forefront of innovation and discoveries. And what can small business do in terms of promoting innovation, helping getting these skilled workforce? Often we have skilled workforce, PhDs, engineers who highly skilled in American universities who can just get a work visa to stay in this country and continue to help American businesses, to help our innovation. I wanted to just kind of get some idea on some of you on what we could do to improve America's position in innovation.
Well, just quickly, I think for us, from the small business perspective, I mean, we have to make ourselves attractive to that workforce as well. So it's really a two-way street. We have to develop ourselves, invest in ourselves, so in order to make that happen. And I think that's a critical element of operating to improve the workforce and meet those challenges head on that you brought out.
Thank you. I'm out of time, so I yield back.
Goes back. I now recognize Representative Stauber from the great state of Minnesota for 5 minutes.
Thank you, Mr. Chair. Since President Biden took office, as we've heard, over 900 new regulations have been passed, costing nearly $440 billion and climbing. And it's added more than 236 million paperwork hours to American small businesses. Over the next decade, compliance with Biden's regulations will cost Americans more than $1.5 trillion. Regulations such as these are unacceptable and often take funding away from growth opportunities for your businesses. Further, businesses should not need teams of compliance officers just to be able to compete in the marketplace. The costs alone are enough to force many of these small businesses to close, further harming our economy. We must and can do better for the small businesses in our communities. Mr. Martinez, how big is your company's regulatory compliance division?
You're talking to it. So I would be compliance, I would be HR, I would be legal. We have 4 employees, period. And so to your point, I read a great book called Buy Back Your Time. And in reading through that, is the highest and best use of my time figuring out compliance? Is the highest and best use of my time figuring out regulatory burdens? Or should I be out selling homes and building communities? And so I love the fact that you keyed in on that, because for a small business, we've been kind of a mom and pop business for 44 years. You're talking to every one of those silos here at this table.
And how does the avalanche of regulations coming out of Washington make your job more difficult?
I can tell you that because we're talking energy codes, because we're talking building codes, when we get a new wholesale set of codes, it's a 600 to 800 page document that we have to peruse through, oftentimes in our truck as we're trying to figure out a code change, and that's just on the building code side of things. When you add OSHA, when you add EPA, when you add Army Corps of Engineers, I mean, the list goes on and on.
Local planning and zoning?
Yeah, not to mention the anti-growth sentiment that we're getting now because of the amount of growth. And so we're fighting it on all fronts. And unfortunately, it's just making the problem worse.
And so reference the 2021 International Energy Conservation Code that's coming without amendments. What impact will these changes have on your business, and how might they impact potential home buyers?
Yeah, we already have a pricing problem. I mean, we've already priced in Boise the local buyer, and I'm born and raised. I'm one of the few that's born and raised in my hometown. But we're pricing the local buyer out of the market. And I think when a regulatory agency comes out and says, well, it's only $200 here and it's only $300, they don't realize the total impact. And with going from our current energy code to the 2021 code will be almost $30,000 for Idahoans, and that is a number I can't stomach.
I mean, the median income in the district that I represent is little over $55,000. It's unbelievable when this comes down on you. Ms. Davis, what effect does increased regulations have on inflation?
Well, I can speak directly to the costs that have to be passed down to borrowers.
Yeah.
You asked the size of a compliance department. So we've got 4 full-time compliance people just to read the regs. We've got 1 full-time person just to deal with the data collection efforts on CRA and HMDA. We'll definitely have to add to staff with 1071. We've got 2 full-time CRA individuals, more than that on the BSA side. And then, of course, we have to invest in systems, so all the frontline individuals are part of our compliance team too.
It's just amazing the number of people you just mentioned you have to hire to keep up with these rules and regulations that are just crushing small businesses across America.
Correct. It's brought up our overhead, and we've had to pass that down in origination charges.
Yeah. Mr. Ewing, I'm very happy that you're bringing your best employees to the Pittsburgh Penguins games. Minnesota's the state of hockey, and when I heard you testify, that's awesome. So I appreciate that. Listen, I'm almost out of time. I want to ask every one of you the question: has Bidenomics and inflation affected your business? Mr. Martinez, your business? So here's the issue. There's not one person that has come in front of this committee that has said, we want more regulations. Please put more regulations on them. Every single member that I've asked, witness at a hearing, no more, we're done. We can't handle it. I'm a small business owner for 31 years. We sold our business. It's unbelievable, unacceptable what this administration is doing to you all. Mr. Chair, yield back.
Representative Glusenkamp Perez for 5 minutes from the great state of Washington.
Thank you, Mr. Chairman, and thank you to all of our witnesses for being here today. Mr. Martinez, I wanted to talk with you a little bit about housing. I appreciate your perspective on the economic landscape for small businesses, including contracting companies like your own. We've also talked in this committee about how we feel the lack of affordable housing can actually be a barrier to small businesses being able to hire and retain quality employees. Someone isn't going to move to a new town for a job if there's no place to live. This is especially a challenge in incentivizing business development in rural communities. I agree with you completely that we need to boost the housing supply to address this issue of housing affordability, and this means in many cases, tackling burdensome local zoning regulations, shoring up the supply chain for materials, and promoting careers in the skilled trades so there is ample labor. But I also wanted to talk about regulations. In November, the Consumer Safety Product Commission proposed a rule that would mandate finger detection technology on all consumer and commercial table saws, which sounds like maybe made for good reading, but the reality is there's just one company that owns the monopoly on that patent technology, and effectively enforcing that would have been a government-mandated monopoly. Your organization commented on the proposed rule that the cost of table saws would more than double. Small manufacturers may be forced to exit the market, and businesses may be unable to operate. I believe that if the commission had somebody who has worked in construction on the body, they would know that if you raise the cost of a table saw by $400, people are just going to put a circ saw on a sheet of plywood, and more people are going to end up hurt. So that's why I introduced a bill to help maintain access to lower cost table saws and prevent the proposed rule from leading to a monopoly on table saws with that kind of technology. So my question, Mr. Martinez, do you believe it would be helpful to have people in the decision-making room who have hands on the ground knowledge about the potential impacts of rulemaking like this?
Yes, Representative, I really appreciate that question. One, you've got way more common sense than a lot of the jurisdictions that we work with. We get excluded out of conversations all the time about growth, about safety, about the things that directly affect us. I was at a summit a couple weeks ago, and even the members in that summit, they were activists, they were academics, they'd never worked in our industry, and yet were proposing laws and regulations and rules that I just kept scratching my head. I am a framer. I was telling my team the other day when we were talking about the table saw issue, I know ways around all that safety. You know, I'm worried that we're going to use a skill saw to, as a table saw to get around that. So it's very similar on the energy code side, again, where you've got one company that provides that product. They're the ones advocating on it. They go, advocate on behalf of that. So I appreciate the common sense approach to that. We should always be at the table on anything housing.
Yeah, board tables, table saws, whatever it is. We need a seat there.
Absolutely.
I also recently visited a transformer distributor in my district, and we talked about their concerns about the implementation of DOE's recently finalized rule regarding efficiency standards for transformers. I know this is a particularly salient issue in your industry due to the significant delays and high costs for transformers that you've outlined in your testimony as a barrier in the supply chain. Could you elaborate on this and speak about what you think should be done to ease supply chain challenges for transformers and other building materials? What other choke points are you seeing?
Yeah, absolutely. So you can't do, just to define transformers for a minute, because it's not the movie, but when you do a transformer on a project, that's what brings power to your project. Power to your home, power to a subdivision. It was a very ill-timed rule in that we already had a shortage on a product, and then we were going to make it more energy efficient, and which just made the supply chain side a bigger problem. So we were able to defeat the efficiency standard of DOE, but we still have a shortage, and it's not the transformer itself, it's the alloy and the components that go into it. But it continues to be a huge challenge. It's just the challenge of the day. Lumber was the challenge of the day 3 years ago. And coming from a lumber state, you probably heard that a lot. And so transformers just happen to be that, the issue of the day that we are really trying to solve. And there's such a cost impact to getting them that, and kind of to your point, I don't even know what I'm going to pay for them. I'll put money down, just get it here. I need it. I can't do my project without it. So.
Yeah, and we're not going to electrify without them either. So thank you very much. Thank you to all for your testimony. I yield back.
Lady yields back. I now recognize Representative Molinar from New York for 5 minutes.
Thank you, Mr. Chairman. I appreciate that. Appreciate you all being here, and I do appreciate my colleagues' common sense. In fact, we often, even this week, get ridiculed for having to draft legislation to preserve the rights of American citizens to buy their own home appliances, as if that isn't the most significant issue facing Americans. And here we are, faceless bureaucrats, establishing rules and regulations that make it difficult to purchase a table saw or a dishwasher or a refrigerator. It is often those faceless bureaucrats that establish policy that frankly make it so damn expensive for all of you. And then, of course, those costs either get passed down to your customers, our constituents, or you fold up your tent and stop working. And that to me is the great crisis that's facing Main Street. Mr. McCarthy, you had offered earlier that it was good to have small businesses at the table and the voice of small businesses being heard in tax policy, what have you. I do want to credit this committee in a bipartisan way under the chairman's leadership. We give voice to small businesses every week. The problem is that small businesses often might make it to a White House roundtable, but they're not the ones at the table, as Mr. Martinez offered, and you all have kind of referenced in your testimony. They're not the ones at the table when it comes to policymaking. Yesterday, the Transportation Infrastructure Committee held a hearing on new emissions standards in California that California acknowledges would have an $86 billion disruption to supply chain, and then went on to suggest that that would have nominal impact to American customers, whether they're buying food products or construction material. Mr. Martinez, I wanted to return to you and give you an opportunity to kind of expand on some of the regulatory burdens. You summed it up pretty well. You are all of the silos in your business. We know that in small businesses that's the case. For you, it's a burden. At times, it'd be great if Washington or the federal government didn't have so many silos. In fact, it'd be nice if one entity knew more about other challenges, so we wouldn't have this regulatory regime that creates such a crisis. The Biden administration consistently has ignored the voice of small businesses. We can pretend it's that sounds partisan, but it's not. Consistently, small businesses have been burdened with regulation because the left hand not only doesn't know what the right hand is doing, sometimes the left hand doesn't even know there is a right hand. And so what the EPA says might contradict with the Department of Labor, might contradict with some local zoning practice. This administration finalized in 2023 alone more than $451 billion in final rules. Imagine that, $451 billion in new cost because of regulations established in 2023, requiring 286 million paperwork hours. I can't even fathom calculating that. I introduced the Post-it Act. Why? Because it would force the federal government to simplify regulations and require access, transparency, small businesses having access to those regulations. Mr. Martinez, why don't you, in a real-world sense, just talk a little bit about how providing greater transparency might, at the very least, provide some benefit to your business, but also perhaps hold the federal government a bit more accountable?
Yeah, absolutely. Thank you, Representative. Really knowing the basis for a rule, knowing why we're doing this, like what is the end goal in this rule? Is it to save money? Is it to save lives? Is it to, tell us what it is. You had the EPA that had a Waters of the U.S. standard. It was being challenged in the Supreme Court, and yet they still moved forward. The EPA kept moving forward with their rule, knowing that they stood on very, and it was an Idaho case, so of course I was a little sensitive to it, but that Sackett case reversed the Waters of the U.S. rule, and yet the EPA kept moving forward. And we, as small business, who deal with the EPA and Army Corps, one or the other, kept saying, this standard stopped. Like, let's wait till the Supreme Court rules, because we're going to just go right back and start all over again.
I'm glad you brought that up, because actually there are members like me from New York. I spent my entire life trying to preserve watersheds, wetlands, and the Hudson River estuary. And the fact that that particular determination by EPA, by rolling it back, some of my colleagues on the other side of the aisle suggest that somehow we're not interested in protecting water. That couldn't be further from the truth. We have environmental standards, federal and state environmental standards that provided those protections. The EPA overstepped. I'm going to run out of time because of my own fault. But Ms. Davis, I recall some years ago in the 1980s when my parents were thrilled that they finally got a mortgage at under 11%. Can you talk about what the highest rate rate of inflation in the last 40 years has meant to lenders?
Well, for starters, the rates have been up. When I was in banking school, the Capstone project provided this scenario that could never possibly happen to ensure that, bankers were prepared, and yet we've seen it. And it surpassed even that never before seen
Thank you, Ms. Davis. I apologize. That was my fault, Mr. Chairman. I yield back.
Recognize Representative Bean from the great state of Florida for 5 minutes.
Thank you very much, Mr. Chairman. Very good morning to you. Good morning, Small Business Committee, and to our all-star panel. Welcome to your nation's capital, and thank you for your testimony. You will always remember this day, the day you testified before Congress. There's no hiding it anymore. Bidenomics is not working for America, for Main Street, and your testimony today really is in sync with the business owners of Northeast Florida, in Clay County, in Jacksonville, that are just struggling with curveball and fastball and just an environment that makes it extremely difficult. In a perfect world, it's extremely difficult to run a small business, but when government is just throwing things in your way left and right, I know it's a struggle. We've had dozens of people sit in the same chairs that you're sitting in right now. Many have testified that they've been in business a long time. They've never seen the regulatory environment, the new regulations come down more than right now. Ms. Davis, would you agree with that? This is the most regulated environment we've ever seen. It is breaking the backs of small business. Would you agree with that statement?
I would agree with that.
Very good. Mr. Martinez, jump in. Tell us.
Yeah, and I lived through a once-in-a-lifetime financial meltdown of 08 to 12 that I thought, okay, now I'm good. I'm back to being in business. And I do feel like we're in an environment now that is harder than it was in that financial meltdown.
I'm going to put you down a yes. Yeah. You agree with that for sure.
It's a long way around
it. Good. No, I'm with you. Mr. Ewing, welcome. Glad to have you here. What say you? Is it the most regulated? Is the federal government just throwing things at you left and right that you've never seen before?
For our business, I can't speak to that directly, but anytime the federal government or any government adds costs of doing business to the business, it takes away from the employees and our ability to treat them better. And that trickles down. And I think that's one of the effects of that aren't recognized on regulatory burdens, additional costs of running a business. Is it's going to affect the business, but it's also going to affect the tens, dozens, hundreds of employees of those businesses, which impact Main Street even further.
Sounds like a yes to me. So thank you very much. Mr. McCarthy, I hadn't forgot about you. What say you? You're trying to get to Mars, but it's hard to do so when the federal government throws all these monkey wrenches in the spaceship. What say you? Is it being overregulated right now?
I think there's a couple of things that have impacted us. I mean, as we mentioned before, inflation has definitely, we feel that. We feel that's our buying power.
But you don't have to, do you have to have a circular saw or a stove to get to Mars?
Correct. I don't have the same situation there. But I will say something that is important that's coming on that does affect us is there are standards associated with NIST and security and so forth. And those are things that for small businesses to start up with those compliances and so forth, that is something that is a new activity, a new burden for us. But I'm not saying that it's not important.
I got you. So it is a challenging environment, and I'll take that as a very strong maybe from
very strong maybe.
And Ms. Davis, I was a banker too. You have the heartbeat of Main Street, and hopefully every small business get to know your banker or a banker that can help you navigate the tough environment. What are you seeing? What are you seeing right now at the bank? What are your customers doing to try to keep up with regulations and a rising interest rate?
Well, I think, many of them are trying to cut costs. They're trying to, figure out ways to continue to move forward. Again, we have demand for credit, but that liquidity is such a big deal.
It is tough. Mr. Martinez, what would you say if you could talk directly to the chairman of the K through 12 subcommittee on education, on how do we pivot to a more society focused on teaching kids a skill? Right. What would you say to that chairman? How do we do it? What should you advise Congress? How do we have a new conversation?
I say re-engage the industry. You walked away from the industry a while ago. It's time to come back. And doing that, there's plenty of programs, there's plenty of funds now, like there's no reason they can't be doing this.
Very good. You just told the chairman. I am the chairman of that
Oh.
committee. We've had multiple you did a great job.
Hey,
by
you're
the
supposed
way.
to let me know.
Yeah, you're,
Give me a
great job.
sign.
That's a little curveball here. We can throw you too. But listen, thank you. You did a great job, and we are having that conversation. We welcome input, and we're going to have to do it together. And I think it's changing. I think kids are realizing I can make more money without going into this debt, which is a whole nother topic altogether. But I'm proud. Look at me, ran out of time, but I'm grateful for each of you coming. Thanks for your testimony today. Mr. Chairman, I yield back.
Back, and I now recognize Representative Musser from the great state of Pennsylvania for 5 minutes.
Yes, thank you, Mr. Chairman, and thank you to all of you. My apologies for being late. I had an earlier committee, and as my colleague just said, good luck following that. Thank you, Representative Bean. So I'm a small business person as well for well over 20 years, helped grow a small business into what eventually became a large business. What is being faced today is really burdensome, to say the least, to put it in the nicest way possible. And boy, oh boy, we hope to correct that come next year. But you know, from energy, that we in Northeast Pennsylvania call gas backwards energy policy, taxes, regulations, crime, interest rates, inflation. The regulations that seem endless, and I start listing them here. It's it's a long list, from the beneficial ownership rule to 1071 coming out of the CFPP. So I'll start with you, Mr. Ewing, and you're from Fayette County?
Correct.
Oh, great. Well, that's a beautiful spot in the world.
It is.
I'll be heading that way at the end of the week. But anyway, or in our great Commonwealth of Pennsylvania. So you mentioned, well, first off, the sunsetting of the Tax Cut and Jobs Act, R&D tax credits, potentially the 199A small business deduction, which has been stated by President Biden. He's doing away with that and all the tax relief that occurred. So how do you all feel about that, Mr. Ewing?
The 199A is going to eliminate a lot of investment that small businesses are able to make, and that's a problem. And we can't. We talked about it earlier. Not being able to plan to invest in your business, you start to pull back. Innovation is squashed a bit, and for us, as I mentioned earlier in testimony, the investment into our people is really what's going to be challenging if the costs of doing business rise substantially because tax cuts go away.
Yeah, it's devastating. I hear from my friends who own small businesses and my constituents and all, devastating. So I read your OSHA officer issue, and in my district, and I have a conference call with them on Friday with OSHA, they seem to have this new walk-around rule where they stopped on a construction site the other day, just, small, putting up sheetrock for people, and the ladder was over 15 feet high, and they said it wasn't secure enough. So after 4 hours of interrogation and permits and getting their licensing, they wrote them a warning and stated that the fine will be anywhere from $0 to $14,500. Unbelievable. Walk around, so-called walk around by OSHA. So we're going to have a little conversation there. Tell us a little bit about your interlude with with the OSHA officer.
It was in our Charlotte facility, and it was, I don't know that it was a walk-around, but it was unexpected visit, and the officer identified what they believed to be a problem with stability of product on racking. All our racking was installed according to code, but this officer, who we found out much later in the process, this was a 6-month ongoing process, was new and very aggressive and wanted to put a name in the local agency for themselves. So
yeah, mount on the wall, right?
Yeah.
Allow me to move on. I appreciate that. Ms. Davis, do you think that the CFPB's 1071 rule will harm or help your ability to serve your customers?
It'll absolutely harm it.
Can you elaborate?
Plain and simple. Well, as part of my testimony, we're able to meet the needs by being effective and fast and efficient, right? That added debt that we're going to have to tack on for all those data collection points is going to hinder the expediency of our lending efforts. In addition, for every compliance officer that we have to hire to manage those data points and the examination ramifications, that's one fewer banker that we have out in the community serving our customers' needs.
Mr. Martinez, has there been anything done over the last 3.5 years that has been a positive development? I know inflation, everything else. Is there any policy? And we're going to work on this. Believe me. That's why most of us are in Congress, to be advocates for small business. Mr. Chairman, I've run out of time, but maybe we could talk afterwards. I appreciate it. I yield back.
I'd like to thank our witnesses today for your testimony. It's been a great hearing. I think you've seen, unlike you see in many other hearings, we do have a lot of bipartisan agreement on where we need to take a Main Street. And I want to thank you all for being here. And without objection, members have 5 legislative days to submit additional materials and written questions for the witnesses to the chair, which will be forwarded to the witnesses. So I ask the witnesses to please respond promptly if that happens. And if there's no further business, without objection, the committee is adjourned. Thank you.